Okay, welcome back to the Clara CFO Group channel. This is kind of the next step of the ERTC. So what we're actually going to do is I'm going to show you how to use Jamie Trull's ERTC calculator worksheet, okay? We talked about it in the last video that I posted, and she's got videos on it as well. We'll make sure all those resources are in the description box below. But what I wanted to do is I actually wanted to walk you through a real life example. So I've basically pulled all of this information from a client of mine, and I've scrubbed anything that's identifying, because obviously we got privacy issues here. We're talking about payroll, and this is something we need to be really sensitive about. But what I'm going to walk you guys through is exactly how I'm helping them determine what the ERTC amount could be. Now, it's really important to know, like, I am actually not going to be filing their taxes for them or doing their amended tax return. That's not something that I feel like I have a specialty in. So we've actually hired a separate CPA firm. What we're doing is we're trying to give as much information, and when we kind of do our initial calculation, because we want to kind of do a check and we want to understand, how much should we be preparing for? Because we want to kind of do our due diligence on the front end to try to see, okay, how much is this credit really for? Are we looking at $15,000 here? Or are we looking at $50,000? I mean, that's a really big difference, and it also will help us with our cash planning. So that's what I wanted to just talk to you guys and walk you through today. So we're actually going to be pulling up the screen share, and I'm not going to walk you through each of the systems that I'm using, because that gets into really specific information. But what I'm going to show you is the outputs. I'm going to show you the outputs. We were actually using QuickBooks Online and Gusto for accounting and for payroll. So we're going to pull reports from those two, and then we're going to use that and fill in Jamie's spreadsheet. So you can go and pull these from any system that you have, your accounting system. That's the easiest thing to pull your financial statements and your financial information from. If you don't yet have an accounting system, please consider getting one. It's probably worthwhile if you are in a business and you're doing any kind of volume. It really makes sense to go ahead and get set up with an accounting system. I do have an offer for QuickBooks in the link in the description box below, so if you want to check that out. And then payroll system, whatever payroll system you have, you've probably got some payroll reports. So most people who are going to be looking at the ERTC have employees, because actually if you're a sole proprietor and you are trying to claim the ERTC for yourself, you can't. You can only use this for employees, not for your own wages. There is some kind of wishy-washiness about whether or not corporations who are owner employees can claim themselves for an ERTC, but we'll kind of get into that later, okay? But sole proprietors with no employees, you guys, this video isn't for you. So if you've gotten this far, you can go ahead and watch one of my videos specifically for sole proprietors, because employee retention credit, it's just not for you. All right, well, let's go ahead and get into the spreadsheet, and we'll talk through this company specifically and see how much they qualify for the employee retention credit. All right, so we're going to begin this recording on the gross receipts tab, because we've already gone through the spreadsheet, and we went through each of the tabs in the last video I did, specifically around this spreadsheet. And so I don't want to go through, but if you want to go and check the eligibility requirements for 2020 or 2021 for Q1 and Q2 or Q3 and Q4, you can go and look at those. Remember, there's those decision trees that are super helpful. But the way that we're going to logically work this is I'm going to first look at this client and say, are they eligible for anything in 2020? And then we're going to say, after that, if the 2020, what can we qualify for? And then we'll look at 2021, okay? And when this is being recorded, we only have data from Q1 of 2021. So we're going to specifically just look at Q1 of 2021 when we're talking about that whole year, just for now, because we're trying to look at this on a quarter by quarter basis. All right, so the first thing that we're going to do is we're going to start on this gross receipts tab. And so in order to, and just to kind of clarify for this client, they were not affected by any government shutdowns. They were able to essentially do their jobs without being affected in that way. So because of that, we're only going to be looking at the gross receipts decline on whether or not they're eligible for claiming any ERTC in 2020. So what I did here is we're going to look at 2019 and 2020, and we're going to look at total gross receipts quarter by quarter. The way that I did that is I went to QuickBooks for this client, and then I went to a profit and loss report. I said that I wanted to pull the full year of 2020, and then I grouped it by quarters. There's an option to display columns by quarters, and then you can click also compare prior year. And then it'll pull a report once you run that looks a lot like this report here. Okay, so what you'll see is I've done a little bit of formatting here and scrubbed any identifiable information, but you'll see basically a quarter with the current quarter and the comparison quarter, and then the percent change is what I selected. And then current quarter is 2020, prior quarter of 2019, and the percent change, because I'm not really worried about dollar change. I'm really looking at the percentage change. Okay. When I go through here, what I'm going to do is I'm going to put in the numbers in order to determine whether or not this client qualifies for anything in 2020. So what we're really looking here is a gross receipts decline of 50% or more in 2020. So we need to compare one quarter in 2020 to the same quarter in 2019 and see if there's a 50% or more loss. So when we look at the P&L of this client, I don't even really need to type in the numbers into Jamie's spreadsheet because I've got my answers right here. And actually Q1 is outside of the timeline that we need to be looking at. Q2 is actually when this client used their PPP for their first draw loan of their PPP. So even if this was over 50%, I would not be able to include these wages because I know that this client used all of their PPP money between April and June, and they used it during the entire quarter. Once they got it, they used it for the entire quarter. So I wasn't really going to be looking at that anyway. So the real questions I was looking at and the quarters that I had a question on was whether or not this client would qualify for ERTC 2020 in Q3 and Q4. And in this situation, it looks like they do not qualify. So it looks like we do not qualify because our percentage change was only 37% and then 46%. And you might say, Hannah, but that's so close to 50%. Can we just round up? And the answer is no, you cannot round up. Okay. This is not, it's not so close. There's a reason that there are, these hard set rules and these set numbers. So in this situation, we would just say, nope, they don't qualify, and we're going to move on to 2021 and see what we can do in 2021. We have essentially disqualified ourselves out, or this client has disqualified themselves out of the 2020 employee retention tax credit. Okay, so we're essentially now all of this 2020 information is not anything we need to look at. But what I will do is I'll go ahead and put in the value for Q1 2019, $499,253.97. And then, and I am going to go ahead and also fill out Q4 because this information is also going to help us determine our qualification in Q1 of 2021. 893,813.29, 478,194. All right, 645,071. Okay, so because so I went ahead and put in Q4, and then I went ahead and put in 2019 and 2020 into these columns, okay? Now, this is signifying already that we are qualifying for Q1 because the previous quarter, which is this Q4 quarter, was more than a 20% decline, okay? So there is two different types of decline qualifiers. You can either qualify for the quarter itself based on the quarter of Q1 2021 compared to Q1 of 2019. If that has a decline of 20% or more, you can qualify for that quarter. And also, if that didn't qualify, you could also do a look back to the very previous quarter. And if that previous quarter had that loss of 20% or more, you can also qualify in that situation. So this is already pre-qualifying us because Q4 had this 46% decline. Okay, but I'm just going to type in the number here because I did pull this report from QuickBooks. I pulled the Q1 2021 gross receipts so we can do a comparison there. And this is what that report looks like. So we actually had a 31% decline in that quarter. So I'm going to type in this number here, 343,744. So what this means is that we qualify for 2021 for the ERTC credit. And we will also automatically qualify for Q2 as well, because Q1 was a qualifying quarter, okay, because we had more than a 20% decline, kind of the way that we were kind of pre-qualified for Q1 because Q4 had that larger loss. We are doing the same thing. So pretty much you're always going to have you're always going to have at least 2 quarters that qualify if you do reach that 20% loss, okay? So that's kind of great to know, because this, really, even if revenue is coming back in Q2, we will qualify to be able to take that. And this is helpful because this client particularly got a PPP loan halfway through 2021. So what that means is that we're going to be able to take some wages before they got PPP and before they started using their PPP loan. We're going to be able to take those wages and see how much we qualify for ERTC, okay? So that's what we're going to do now, because we've already determined that we can't qualify in 2020 for any ERTC. But what we're going to do now is try to figure out how much we can actually qualify for, and this is where we go and pull some payroll reports. So just to give you guys some really clear information, this client pays a monthly payroll. And they paid January wages before they got PPP money, and then they paid February and March wages in Q1 with PPP money. All right, so the only wages that we can include for the purposes of ERTC are going to be our January 2021 wages. Those are the only qualifying wages in Q1. So what I did is I went into Gusto and I pulled a payroll report, and I'm going to show you what this looks like. So this is a very stripped down version of what their payroll reports look like coming out of payroll. We have lots more columns here that I've summarized in lots of different ways. Let me make this a little bit clearer for you. And obviously I've stripped out the employee names so you can't tell who they are. But this is the payroll journal. So I pulled the payroll journal just for January. You can see these dates right here, just for January, okay? And we are able to take the gross earnings, our qualified wages, and then we're also able to take the employer portion of the healthcare costs that we've paid for these employees. And so that's what we're going to be looking at as the total wages that we can claim under ERTC for the quarter. Okay, these are the qualified wages for ERTC. All right, so again, this is a payroll report coming straight from Gusto. It's been, a lot of stuff has been tailored out of here, but this is basically what we're looking at. So you can see that these employees are getting paid kind of high wages. So, $6,000 per month, $12,000 per month, $4,000, $7,000, and so on. So what we're going to do is, and then I also have those people's portion of the healthcare costs that has been specifically allocated to them, because you can put allocable healthcare costs and you can add that to the qualified wages. All right. So what we're going to do is we're essentially going to take these numbers and we're going to plop them into this other tab. Go to the qualified wages tab of Jamie's calculator, and we're going to start putting in these employees' wages. Now, remember that we cannot include any relatives of the owners. So actually what we're going to do is we're going to take out these first 2 people, because this includes both the owner and a relative, okay? So these 2 wages we're actually going to exclude at this point in time. Now, there's been a big debacle and kind of lots of people trying to discuss, lots of CPAs are trying to discuss right now whether or not the owners of C Corps and S Corps can be included for the purposes of qualified wages under ERTC. But the IRS has specifically said that relatives of the owners cannot be included for the purposes of ERTC. So with that, I am kind of taking a slightly more conservative stance that I am not including them, and I'm not going to include them for the purposes of the explanation of this spreadsheet today. However, I would say that, talk to your CPA, see what they think is right, and you can make that decision for yourself. And, honestly, the IRS might come out with some more clarification on this as well. So make sure you're talking to somebody who's doing the ERTC calculations on the regular, because they're going to be a little bit more up to date with, the latest news on that. Okay. So I'm going to actually exclude these first two employees. Okay. And what I'm going to do is I'm going to transfer these numbers here. I'm actually just going to go ahead and copy, and we are going to paste them in to the spreadsheet. Okay. And so this is where we're going to say, okay, look, total qualifying wages have been included here, and none of these are over the $10,000 total limit that we can have per employee per quarter. Now, if I didn't use PPP, or I didn't get my PPP until, let's say March, and I had also included February wages, then a lot of my employees would be double this, and I would have to max out these wages at $10,000 per person. So for example, if this person here had $16,400 rather than the $8,200 they were getting paid, it would cap it at $10,000 and then give you the total estimated credit that you could get of $7,000. Okay. So we're going to back that out because these are the only wages during the quarter that were not paid with PPP. All right. So what this means is that the estimated tax credit for this one quarter, for this one payroll, is $32,000. You can see that if you scroll down here, you can see that all the way down at the bottom. This gives you lots of room for lots of employees, but it's also over here in this little summary right there. So what this is doing is it's showing us, okay, yes, absolutely. It makes sense to go and see if this credit is something that we can claim, and to go and pay a professional to help you actually go and claim these tax credits and fill out all the right paperwork and do it quickly. And the other thing that I've really noticed is that the people who are filing these returns on the regular, they're also knowing the tricks. They're also knowing like what the IRS is actually doing. We were kind of troubleshooting with a client a couple days ago. And, the people who are actually helping file these returns are the ones who have the better answers than the people who just know it theoretically. Okay. So that's another reason why we say go and find a professional. Now, we do have somebody on the Clara CFO group team that is answering questions on the ERTC. So we are going to put that link in the description box below. So if you have questions and you go and you fill this out, and maybe you want to get help filling out your 941, we're not doing a lot of tax returns ourselves, but we do have the clarity calls that you can book specifically for ERTC and get those questions answered for yourself. So if you do feel like this is something you want to tackle yourself and you just want to get a little bit of professional help from a CPA, we do have somebody on our team who can help you with that. That being said, I also want to remind you that this spreadsheet is available. It's in the description box below. This spreadsheet is not free. It is a small charge, but as you guys can see, if you can fill this stuff out, figure out whether or not this credit is worth it for you, a small charge for this spreadsheet is absolutely worth it. This thing is like gold. And I highly recommend you grabbing it if you think you could be eligible for these credits. Okay. Find the link to Jamie's spreadsheet in the description box below, and you can grab it there. And if you do want help with ERTC, feel free to book a call with one of our team members on that. And ultimately, you guys just go through this and see how much you could be eligible for. This is a lot of money that is sitting on the table and that is meant to help bring more cash back into your business. Okay, well, to me, this looks like it's absolutely worthwhile for this company to go and try to claim this credit do their due diligence, pay a CPA firm to do this for them, because those, couple $100 in accounting fees is going to return tens of thousands of dollars in tax credits. So this is why we do this, you guys. We do due diligence at the little bit of due diligence at the beginning. We do some initial research. That is exactly what this spreadsheet is for. And what it helps us understand is, okay, is it worth my time to go and try to pursue and go to the next level with this? Okay, so this spreadsheet is not meant to be like sent to the IRS or anything like that. It's really meant for you to just do that first level of research to figure out, okay, what can I qualify for here? So use that spreadsheet for that intended purpose, and then go and get a CPA, get professional help to actually file these forms and claim the credit, and make sure you're filling out all the paperwork correctly, because you don't want to get stuck forever in amending IRS forms. It's just not something you want to do. And I've looked at the 941X, and it is a beast, and you definitely want to use somebody who has filled that out a time or two. All right. Well, thank you so much for being here. Please like this video if it was helpful, and make sure you're also subscribed to the channel, because we love to have you here. And yeah, more videos to come. All right. Bye, everybody.